Hey everyone, Tyler from Stock Scores here. In this week's Market Minutes video, I'm going to look at the importance of keeping your focus while trading. I'll do the regular weekly market analysis, look for some opportunities to trade using the Stock Scores Market Scan tool, and of course the trade of the week this week on SOLO. All right, let's get into this week's topic, the importance of keeping your focus when trading. We are most likely to lose our focus when the market gets boring, when there doesn't seem to be a lot of action in the market, because it seems like it's a waste of time to look for opportunity, to run our processes to identify those opportunities. At the same time, the best opportunities come out of slow, quiet trading, because that slow period for the market is what builds a base, what winds up buyer motivation. When you have a market that's very quiet, you're building like a coiled spring for the next break in the market. And so I personally have a problem with keeping my focus in these times. It feels like it's a waste of time to do the work, and I often will go do something else. This happened to me this past week on Wednesday. Instead of taking a trade that I knew I should have, that I had actually put in a buy order for, it ends up being the trade of the week, which we'll talk about at the end of the video, I instead hopped in my car and went skiing instead. And so the powder was calling, the market didn't seem to give me anything, and as you'll see by the trade of the week, when I talk about it at the end of the video, it ended up costing me a lot of money. All right, let's get into this week's market analysis. Starting off, as I always do, with the US markets. Here is a chart of the S&P 500 ETF, SPY, and you can see that we have an upward trend that has been in place for quite some time, upward sloping channel. We're kind of in the middle of that channel, and so this is a bullish chart. Short term, the S&P 500 is bullish, getting a little extended to the upside. We've been going up for quite some time, really since the third week of December, but there's no sign of weakness yet, so we have to stick with the trend. Moving along to the longer term chart, that's where you can see the really V-shaped bottom that we've had in the market, which is very uncommon. You don't usually get V-shaped bottoms. Usually they look more like this one here, where it's kind of a downward trend, a consolidation period, and then a break higher. In this case, we went down, we've gone up. That's unusual. We are now coming into the next area of resistance, right around that 280 mark on the SPY. Again, no sign of weakness, but we should expect that there will be some selling pressure there. I wouldn't stop being a buyer yet because there's no breakdown in even the short-term trend, but keep in mind that we are coming into that resistance at 280, and then we'll of course have some resistance at the highs that were set last fall. On to the Russell 2000, which represents the US small cap stocks, and you can see also that the buyers are in control here. How do we know buyers are in control? Very simple. If there are rising bottoms on the chart, the buyers are in control. This market also coming into that resistance from this old price peak. It's not major resistance. Of course, the more important resistance is up in this area, but still something to keep an eye on. We may have a few up days at the start of next week and then see a little bit of selling pressure as we bump up against that resistance level. Canadian markets, let's take a look at the TSX 60 ETF, T.XIU. And again, we have rising bottoms, perhaps not as enthusiastic as the S&P has been with the buyer support, but there are rising bottoms here, which shows us that the buyers are in control. We broke out through this very short-term resistance, and that indicates that the Canadian market is also likely to move higher. TSX larger or longer-term chart looks very similar to the S&P chart. We've got that V-shaped bottom. We are coming into that longer-term resistance. Looks to me like this market wants to continue to move higher until we get a break of trend, continue to be on the bullish side of the trade. TSX Venture really underperforming the larger cap stocks in Canada. We do have some buyer support because we have rising bottoms, but it's not without a little bit of fight against this pessimism. You can see the downward trend line right there, and until we can break up through that, I wouldn't get too optimistic for the next leg. But based on what happened Friday with that little, let's call it a flag break right here, we have a little flag pattern and a bit of a break. Once we get a breakout through that downward trend line, you should get the next leg of the trend, but we need to break through the downward trend line first. On to currencies. Let's take a look at the US dollar first. US dollar has been up the last couple of weeks after a bit of a pullback coming into this resistance level. I expect that we'll bump up against that, but notice this past week how we have what's called a doji there. So the market closed where it opened, and that's often a turning point. You can see a doji was here as well. Market moved down, doji, and the market started to move up. Now we've been moving up, doji, maybe we move lower from that zone. So we want to keep an eye this week if the US dollar shows some weakness, because if that happens, what it means is that the market will have formed a falling top for the US dollar. So we haven't done it yet, but if we break lower next week, we'll have formed that falling top after breaking this upward trend line. That's actually a sign that the US dollar is topping out, and therefore you'd want to get pessimistic if that happens. And it hasn't happened yet, but this coming week will be an important one to watch. Looking at the Canadian dollar, as I've talked about in recent weeks, it was bumping up against that downward trend line. It ran up, hit it, and we've seen it roll over. The question now is, can it build a rising bottom? It's kind of the opposite of what we're seeing in the US dollar. Can it build a rising bottom and then take another stab at breaking that downward trend line? If that happens, then we can take our rating on the Canadian dollar from bearish to at least neutral and perhaps even bullish. Interest rates, looking at the US bond market, and again, I say this every week, but if this is going up, that means interest rates are going down. We're building a cup and handle pattern. Essentially what this means is the market was trying to break resistance, something went wrong, and then they fixed that problem. That was essentially Powell saying we're going to be patient with raising interest rates. And now we are going sideways underneath that same resistance level again. What we need is a breakout through that resistance level. That would indicate that interest rates are going lower still, and will do so until the bond market gets up to that price peak from those three tops back in 2017. All right, moving along to commodities. We always like to take a look at gold and oil. So gold has had a pretty good year, maybe the last 3 or 4 months, and we are closing above its open for the week. It started the week kind of weak and ended up closing strong, and so that tells us that the upward trend that has been in place for a number of months is still intact. I still think we get up to this resistance zone at about 128 on the GLD. When we hit that, we're going to see some selling pressure for gold. On to the oil chart, and I'm showing the daily chart here because it shows a little bit of what's gone on in the very short term in the month of February. We were showing a bit of weakness. We've made a comeback from that weakness, and we're trying again to break through that little bit of resistance. Now, there's quite a bit of volatility there, which tells us that investors really aren't confident that they want oil to go higher, but there is some buyer interest in oil, and that's a good sign, perhaps indicating that the market thinking the global economy is going to improve a little bit. So it's not a real strong signal for bullishness, but we're starting to get there after a very, ugly few months with that sell-off. There's some optimism creeping into oil. I wouldn't get too confident yet because there's not much volume. You can see volume is very low there, but something to keep an eye on. All right, and then the fear chart, we always like to take a look at the VXX now B, because they've started a new contract or ETN for volatility, and it is essentially moving to new lows, local lows, and therefore not a lot of fear in the market. Some might argue complacency, which is negative. If you think that investors are complacent, they're also ripe for panic when some weakness comes. We don't have any weakness yet, but let's keep an eye on that. So my ratings, neutral and bullish, neutral long-term, bullish short-term for both US and Canadian stocks. Gold, neutral, long-term, bullish, short-term, and also the same for oil. So we've got the same ratings on all markets. Now, any short-term market weakness that we've seen in the last little while has been met with some motivated buyers who seem to step in, likely because they're anticipating some sort of positive outcome on US-China trade, and nobody wants to get on the short side if some good news comes out on that. So we should remain optimistic until markets start hitting some of that resistance or break those upward trend lines in the short term that I've shown. Gold is stable, but its upside is getting limited. We're not too far away from resistance. Oil is trying, but as I said, it really hasn't shown real good, excited buyers yet, and fear is relatively low. All right, so let's, instead of me showing you simply charts of stocks to watch, let's jump over to the Stock Scores website and do a scan like we did last week. That was a fairly popular thing to do. So we'll jump into the market scan tool. I'm going to run the abnormal breaks US scan this week, which looks for stocks behaving abnormally on the US exchanges. Now the reason I do this is because abnormal activity tends to predict strong upward trends. Almost all strong upward trends start with abnormal activity. However, not all abnormal activity leads to strong upward trends. And so what we have to do is qualify the stocks making abnormal activity and assess their chart. So the first one that I'll show you here is IPWR, and you can see the abnormal action. We've got abnormal volume, abnormal price action. We're breaking this downward trend line. We've done that there. We've built a rising bottom, which, as I said earlier, is a sign of buyer support. And so in many ways, this is a good chart. The negative thing is that on Friday, it really failed to close near its high of the day. It's a little bit hard to see, but there's quite a long tail there on that chart. So that's a bit of a negative. I would rate this one a 6 out of 10. Still has promise, but not quite as good as I'd like to see. So I'll go through these fairly quickly. If I see something worth talking about, I'll bring it up. So here's another one that has a similar sort of chart pattern. You can see the downward trend was broken. We've built a rising bottom. And then on Friday, very big volume, 4 million shares, and a little bit of positive price action there. That's pretty good setup. Again, a little bit off of the highs is where it closed on Friday. We can see that if we take a look at the shorter term chart. This is the 5-day, 5-minute chart. And it didn't go out at the end of the day near the highs. It was kind of off of the highs, but it's not bad. And there you can see the strong volume coming in. I would rate this one a 7 out of 10. It's a better quality chart than the last one we focused on. 7 out of 10s I think are worth considering. So keep an eye on OMED. So I'll go through a few more of these. We won't do all of them because it'll take just too long. We have 60 of them. But my process on a daily basis is to do this scan, among others, looking for stocks behaving abnormally from predictive chart patterns. So here's another one we can take a look at just to discuss some of the things going on here. There's our downward trend. There's our build of a rising bottom. And we're starting to get a little bit of price action there. The main problem here is no volume support. The volume isn't all that high. So I would give this one a 6 right now, but something where you'd want to keep an eye on it, because if it gets some strong volume, if it can break through that resistance zone, it starts to get a lot more interesting. So keep an eye on ESV for something like that to happen. All right, we'll go through a few more. Now, something like this, just as a lesson, a little bit of education here, I guess, is we don't want to chase abnormal activity when it's not early in the trend. So we've got very abnormal volume, very abnormal price action, but this is not a stock breaking from low volatility. It started its move way back here, and you can see on that day the volume was a little higher. Obviously with the gap up, there was some positive price action. That was the day to consider it. But up here, well into the upward trend, it's just too late. You know, the stock at that point, back when it gave its buy signal, was just a little over $4.50. Now it's $8.50. It's getting close to a double already. I don't like to chase the abnormal activity. It's just too risky if it's too far into the upward trend. So let's just finish out this page, and then we will move on to the trade of the week. A couple more here. You know, here's another example of something you don't want to consider. This stock, it's got nice abnormal volume, abnormal price, but look what's happening. It's coming into this long-term resistance level, having made a significant move up already. It's just very likely that this stock is going to see some profit taking next week as it bumps up against that resistance. Is it certain that it will? Absolutely not. We trade probability, and the probable thing to have happen is that it will get stuck and go down a little bit, or at best go sideways. All right, we'll do a couple more. I don't know if we'll find anything else to consider. This INOV, not bad. This is a stock that has already started its upward trend. You can see it broke the downward trend line back there. You can see the spike in volume, the price action. That led to a nice move. And then it went sideways for the last 6 to 8 weeks. And then on Friday, tried to break out, kind of failed. You can see again the strong or the long tail there. Volume was good, but that strong tail indicates that there was some sellers at 15 that wanted to keep it from going higher. This stock has some promise. I'd give it a 6, but it's also got some issues in the chart. All right, so let's jump back to the presentation and go over the trade of the week. Now, as I said on Wednesday, I'll tell you the story behind this stock. On Wednesday, I found Solo right here, and I put in a buy stop. And the reason I put in a buy stop is because it was a very illiquid stock, and it had pulled back after the action candle. So there's our pink dot right there. So it made the action candle, which is what my algorithms look for, and it was to me a buy if it could get back above the close of the action candle, which was right about there at $1.90 a share. Well, 20 minutes later, it was down here, and I said, this probably isn't going to work. So I canceled my order to buy if the stock were to hit 190, thinking it wasn't going to happen. This was an illiquid stock that was fizzling out. That was wrong to do. I mean, there was no harm in keeping that buy order open. It would only get filled if the stock started to go up again, and that's exactly what happened right there. But by that time, I was halfway to the ski hill, dreaming of powder instead of dreaming of profit. So let's look at the economics of this trade. On the SOLO, for $100 of risk, it wasn't very capital intensive because it was quite a volatile stock. You only had to take a trade of 670 shares, which meant a position size of $1,273. Now, you probably couldn't leverage this trade. That's why I say here with margin, it's not applicable, because most brokers won't let you leverage a trade under $3 a share. Some will, but most won't. What that meant, though, still, is because this trade went up 16 RR after slippage, that was a $1,600 profit on a trade that required $1,273 of capital. That was a 125% return on a stock that had a hold period of less than a day. I mean, essentially, you're buying in the morning and out at the close for that 125% gain. Fabulous trade, and sadly, I was carving turns in the snow. Oh well. Lesson learned, all about focus, and that was this week's topic. So I hope that you've enjoyed this week's Market Minutes and found it educational. If so, please click on the like button, subscribe to the channel, click on the alarm button for notifications of any time that I upload a new video. I do have some new extra videos planned, and so if you've put on notifications on YouTube and you're subscribed to the channel, you'll get those updates as soon as I upload the new videos. I hope that you have a great week in the market, and as always, trade well.